Hi, and welcome to CR Trading. Today on the MES H24 contract, which is the micro E-mini S&P futures contract for March. We are on the 1 minute time frame. The red and the purple line is the 30-second opening range, and the brown lines are yesterday's open, high, low, close. So right now I'm just going to kind of check out price action a little bit, see what's happening. I'm going to come in here. Actually, we're going to expand this view and drag it over here a little bit for you. Kind of looking for a breakout of the opening range here to take. Looks like the high side was swept for yesterday's close already, so I'm thinking if we're going to fake out, it's probably going to be to the high side for 5, 6, 7 points, and then we will head down lower for the bigger move. Maybe taking out yesterday's close and heading towards the open. But we shall see. That is not what we want there. I did not like how that slid back down, so I just took a quick profit with that. The price action looked a little wonky to me. Had to make that decision on the fly. Sometimes you just don't have time. I wanted to take a little bit of profit instead of a scratch on that one. Again, here I'm just going to kind of watch the price action. Yeah, I mean, getting out where I did, I probably didn't take the maximum amount of profit now looking at this. But it was a strange candle here. So we're going to go over to the 15-minute time frame just to see what this candle looks like. Yeah, breaking out of the opening range. Probably should still be long to about 51.80. But that was just kind of my mistake. I got out too early because I didn't like the price action, and sometimes those mistakes are kind of costly. Like here, cost me at least 2-3 points. So because that trade was basically a scratch, I'm not going to re-enter. I do think we sweep the high, which is located right there where that yellow cursor is right there. Oops, if we get in the right spot. But yeah, right about there. So 50, 51.79. 25. So getting out, I think that's going to be swept to the high side, and then we'll probably move lower to head towards yesterday's close, and maybe even the high from the previous day, but I don't think we're going to get below this at 51.41.75, which was from early this morning at about 8:30 on the news. Yeah, and like I kind of thought, we're going to sweep that high. I just jumped the gun a little bit, I believe, and was not able to capitalize on taking that trade. So sometimes, you're watching that price action on that 1 minute chart, things bounce around, get a little crazy. Because I like to be flat if the price is inside of the opening range, so I don't want to be in a trade when it's in the opening range. Above the opening range, I'm long. Below, I'm short. But now that it's stretched 6, almost 7 points, I don't feel like I should jump back in to try and grab another 2 or 3. I just don't think the risk is worth it, because the risk for me is back to the opening range, which is 6 points below. So I'd be risking more than I think I'm going to make if this gets to 80 or 81. Now, if it continues higher, well, then I'll have to reposition and reevaluate what I'm thinking. And as you know, trading is all about making adjustments and changing some of the things that you're doing to help and to evolve and things like that. So here I'm just going to kind of watch the price action a little bit, see where we're going. We are on a 15-minute time frame right now. The brown lines are yesterday's open, high, low, close, and the previous day's open, high, low, close. So one thing that's kind of intriguing about the price action here is that now that it's 9:45, we've entered the first 15-minute orb, so to say. I really want to see this candle break it. I'm going to drop back down to the 1 minute, see if we could find anything to execute on. So there, it did break or it got to 80. And it broke 80. So now I just got to kind of sit tight. So I did miss that trade by taking a scratch. Should have still been in the long, but that's one of those things. Sometimes you see it. When I was trying to execute on the 1 minute, it dropped back into, like I said, I'm flat in the opening range. So when it dropped back into the opening range, I was flat. I guess now the key is going to be is how far is this going to extend? And we could kind of see that, well, would I love to come on the live and show that I can make $1 million? Oh, of course. But trading really comes from patience and being disciplined and doing this day in and day out. I said this many times, I could be just wake up and trade. For me, there isn't really any planning or foresight or market examination or anything like that. I get up, I look at what the market gives me, and I take what the market gives me. Can't do anything else besides that. And that's why I prefer to day trade, because I don't know what the market's going to do tomorrow. I don't know what it's going to do 2 days from there. I don't know what it's going to do 3. And I think it's a lot easier to predict what's going to happen in the next 10 minutes than what's going to happen in the next 10 days or 10 months. Um, so, you know, basically we are trying to predict the future here. And again, this breakout long would have been the trade to re-enter. But I didn't, because I did not like the price action on the 1 minute, how we stopped at the yesterday's high and then went back into the opening range. So I missed out on a good 10 points here. But that's, it's kind of the way it is sometimes. I'd rather make a mistake that cost me money to be made than make a mistake where I'm actually costing myself money to try and then recoup that later on. Whereas this way here, I'm just missing out on money. So what we're going to do is we're just going to kind of sit and wait and see where this extends to and how far up this is going to take us. I do think we do have a fair value gap a few candles back, and if we do enter into that, I think that becomes more of a reversion gap. Then we'll be heading down from there. So that would be a good place to look and see if we're actually going to come down, would be to get into that gap. So I'm just going to watch here. I still think we're going to make one more push higher. Probably, unless this candle drops into the gap. I would say probably around 92-ish, if I had to pick a stopping point. And again, we'll go back to the 1 hour chart for this. I just want to show you guys something a little bit different here. Yeah, 60s. Yeah, I would say around 92, 93 would probably be the stopping point. So what I want you guys to take a look at here is the cluster of opens and high-low closes and stuff for the last couple of days and where we've gone. It only goes back like 3 days, but I just wanted to show you guys that because of where we've come from and where we could go, you can kind of see how we're extended past what I would consider a normal rotation in the S&p 500, which is about 21 points. So over the last few days, we've extended past those normal rotations. So at some point, I would expect that to get tired and we'll have to have a bigger rotation down to kind of like counteract those. But, when that's going to happen, your guess is as good as mine. So now what we're going to do is we're going to drop back down to the 1 minute time frame. So we did sweep the high that was made at 9 o'clock this morning at 51.79. So now I kind of expect us to come back towards the opening range. Are we going to make it there? I say yes, but I've already been wrong once today, so. But I do think there is room for one more push higher to about 90, 92, somewhere in there. And I kind of think that's where we're going to push to shortly, so we'll push to that, and then we'll come back, and that should give us a decent area to then take shorts from. I mean, because as it is now, we're already about 12, 13 points from the opening range. And we're only a few points above the high that was made this morning, so, nothing too crazy. Yeah, so I do think we're going to get one more push to about 90-ish, uh, you know, give or take a couple points. A lot of times in the past when I was trading, I was doing a lot of hyper scalping, and I wanted to simplify my approach and spend less hours in front of the screen because I was trading um, ES and NQ rotationally. So rotationally means I could find a rotation any time of the day. It could be day, it could be night, it could be 2 in the morning, 2 in the afternoon. It just depended on what the rotations were. And yes, around the New York session open, around the London open, around the New York close, around the London close, there are certain times where, yeah, I could kind of predict whether it was going to be a rotation or not. But that's what I was trying to do. So basically, I was trying to trade from around here at like 9. If you look where the yellow lines on the cursor is, the crosshair, right below. I would try and enter in around this area around 9:32, and then I would take it up to 82, 83. At 8:30 this morning, I probably would have been in a trade somewhere. Just because those rotations, you don't know when the rotations are, and there's two ways to look at time. There's one way to look at time is that time dictates when we should be trading and should not be trading. Another way to look at it is time is cyclical, and we can be trading anytime we want, basically, because the market's open 23/6. And so because time is cyclical, and the only thing is that we as human beings run out of it, but because it's cyclical and it keeps going and it keeps going around, new day, there's trading opportunities throughout those days and times depending on where you are in the rotational cycle, and not necessarily what time of day it is. There's another way to look at it as times of day are important. I would say New York open is important, London closed, London open. The Asian market open can be another area. There's hours between 10 and 11 in the morning Eastern time, 2 to 3 in the afternoon Eastern time. Those can also be important. But again, it depends a lot on the rotations. So knowing whatever product you're trading, whether it's the ES, NQ, Apple stock, Amazon stock, it doesn't really matter as long as you know how that product acts. So I trade the ES primarily because I know how it acts. I know it moves in blocks and in sections. I also trade the NQ sometimes. It depends on the how I'm feeling, and whether I want a little more action or a little less action. But that's kind of personal preference, and it's just knowing. The important takeaway from this is knowing your product, and I kind of never understood. I mean, it may take a totally different mindset than I have, but I never understood the people that could just pick out, oh well, Bank of America's moving today. We're trading Bank of America. Oh, Tesla's moving today. We're trading Tesla, and bounce around through all those things because the charts and the rotations are all different. So, yeah, Tesla might be moving, but is it moving any more than average? I wouldn't know unless I looked at the chart for days going back, and I looked at the rotations and studied that stuff. For me, I like to choose one or two products so I could just wake up, roll out of bed, and trade that product because I know what the average rotations are already. I know where price is and where prices could be going because I trade that product every day. So for me, doing that is a lot easier and simpler than bouncing around, and then I would have to study, Apple, Amazon, Facebook, Tesla, Bank of America, or whatever stock is moving, Home Depot. Then I'd have to bounce to all those sectors, think of all those things, do that at night so then I can be prepared for the next day. It just seems a lot more, it just seems more difficult to me. But knowing a product like the back of your hand makes trading that product a lot easier because you can tell when something's amiss. I wouldn't be able to tell you if something's amiss in Tesla stock or Apple or Amazon. Why? Because I don't trade those every day. I don't look at it. I don't spend the screen time on it. ESNNQ, I could tell you. Before I did the YM as well. Years ago, it was gold. I could tell you all the nuances about those things because that's what I was primarily trading. So when you're primarily trading those things, that's what will give you that insight and things like that. So now here we're just kind of waiting this out as you listen to me ramble. But like I said, we are approaching 90. We did make that push after those two red, or well, on my chart, it's a pink candle, but those two red candles on the 1 minute chart where I said we're probably going to make another push. We did. Again, I probably could have entered that trade around 82, but my risk would have to then be into the bottom of that gap. So I didn't like the risk to reward ratio given that 90 is only a few points away and 70, 50 is a lot further away to know that I have a safe stop on that swing. So all right, let's take a look at this just to give you guys an example. So at 9:52, the bottom of that candle was at 51.82, and right there was probably where I would have entered after I saw the candle come in. And now where would have been a safe place to put my stop is kind of what you're asking. Well, the right there where the line is 77.25 would have been there. So that is 5 points from the 82 mark at 9:52. That risk, if I think it's going to 90, is not worth the reward. Now, if I could have had a stop just below 80, then I probably would have taken that trade, but I didn't think 80 was a safe place to put the stop. So I know this is kind of hindsight, but I just wanted to show you guys kind of how I think and why I didn't take that trade to possibly make, 5-6 points here ish, but that's why, because the risk I felt would have to be below in that gap, really yeah, 75 would have been there. 77 could have been a decent stop too. But again, still, you're taking almost 5 points only to try and make 5. And there's not really, I don't really think it's going to make much past 92. So again, it's not even a 2-to-1. It's like a 1.6 or something. But again, now if I was looking at it like, okay, we're going to get to 4,200 in the next hour, then yes, that could become a trade because now I know I have 10 points available and my stop is about 5 points away. So I know I have those 10 points available. My stop is 5. That's 2-to-1. I'm okay taking that. That would be an okay trade. But if I'm not getting that, to me, it's just not worth the risk. It's not worth the risk of hitting the button. Because again, if I'm stopped out, now I'm out 5 points. I have to recover those 5 points, and that means I've already missed the trade coming back the other way, part of it anyway. So then now I have to decide, am I getting back into the opening range, or am I just going to, is this just a quick reversion where it's going to stop in 5 points? So again, I have to take into consideration the risk versus reward and whether or not that is a sound decision. So that's kind of how I trade now. Before I was a hyper scalper, I would throw on a 125 tick chart. I think I've done a couple lives with that where I do throw that on and trade the micros, and I'm just in, out, in, out, in, out, in, out. I still can trade that way, but as I've gotten older and my beard has gotten gray, I just don't want to do that anymore, because it's a lot of time in front of screens. It's a lot of commissions. There's a lot of factors that go into it that to me just make it harder. There were times in 2018 where I was up against it and I was basically adding to shorts, and I just kept adding and adding. And that was when that SoftBank, I believe that might have been 2019. It was during the summer where SoftBank was driving the NASDAQ up. And I'm like, well, I knew they were driving it up, and it was just like, how long could I stay solvent to do that? I ended up, I was at one point, I was down quite a bit of money. I was down, I think, around 45,000. I ended up making that back. I ended up taking about 20 something thousand in profit on that one. But it was a rough few days, and I don't want to trade like that anymore. Because I don't want to have days like that. I don't want to have to, explain to anybody, yeah, well, for the last few days, why have you seemed off? Oh, well, I've been down a cheap new car that you could buy. Well, back then it was a cheap new car. Now it's probably not, but when you're like, oh, I could have bought a couple-year-old car, but instead I'm down that money. Just when you talk to people and people ask stuff like that, and they're like, what? And you're like, yeah, it's okay. It's just a different mindset. And when people look at that, they're like, you're down 40,000. That's like a down payment on a $200,000 house. Well, it was back then, again in 2018-19, but now things have changed quite a bit. So we did get up to 91.50, which was right around my 92 mark. Are we going to have another push here? I'm not sure. This is where these are one of the things where now it kind of becomes a coin flip. I really don't know if we're going to be going higher. So like I said, if I was in this trade like I should have been, still probably, I might have gotten out around 82-ish anyway. But if I was in the breakout trade like I should have been, but because I took a scratch, I put a hold on that. Would I be continuing with the trade at this point? Probably not. I probably would have been out of this trade by now. And this is kind of where, are we going to turn soon? I'm not sure. I can't really say for sure. So that's kind of how I'm looking at this, as that now, I'm not exactly sure whether this continues or not. So this is going to be kind of a look and see kind of thing, and I can kind of go from there and decide what I want to do. But right now I'm just going to kind of sit tight and see what happens before I make any decisions here, because again, we've extended past kind of where I thought we were going to stop. It still may consolidate and then turn around here. I'm becoming less confident of that actually, but you know, that's part of trading. Is as you become confident, you know, certain areas attract price, and if you've been trading any length of time and you kind of see these areas and things, and sorry about that, guys. I was just kind of watching price action there real quick, and I was trying to look at something else on another screen that I have up over there. That I have a monitor, and that's looking at some other markets that doesn't really influence any of my decisions that I'm making on the ES, but I just kind of glanced over, and it took me a minute to look back. But so now we've reached my 92 level. So what kind of happens from here? Could it keep going? Yes. Would I rather it not keep going? Sure. But I think this is kind of like one of those coin flip situations where, yes, it could continue to go to probably about 97, 98, get another 10 points. That gives us about a 70 to 90, about a 30 some odd point rotation. Which that could happen. Right now, we're probably at about 20-point rotation here ish. If you take from the opening range, the top of the opening range, it's at 69, and right now we're at 90, so we're at 21 points. Did extend a little further than that, so there's your average rotation of 21 points right there. Now, does it stop at 21 points? That's the question. I could see this rotation going 30, 32, somewhere, you know, something like that. But again, that's one of the things that rotational trading kind of helps you with, is because now that I kind of see that we've rotated 21 points, I could kind of start to look for an area that I want to short this back to the opening range. So that's kind of how I would look at this. There is a clean high above. I would want where the yellowish line is right there to be taken, and so now I could kind of look for a short. And see, take some points out of this. I'm kind of not convinced that this is it. I think we may have one more push to 95, 97 maybe. Just kind of looking at price action here. So this right here could be a new swing low if this candle stays above it. And I don't know if it's going to. So I'm not really going to enter a trade here on the downside yet. We're gonna flip over to the 5-minute just to see. Yeah, so this 5-minute candle is kind of at its midpoint there, so I don't think we're necessarily going to flip. Let's see where this next candle goes. All right, here's the next 1-minute candle. Yeah, so that so this candle right here may have created a swing low right there where that yellow line is. So we're gonna kind of hold off for a minute on taking any entries here. I kind of saw that forming and thinking that we were going to make one more push, but sometimes it's hard to tell on the 1-minute chart because it's a chart that a lot of people use. So if there's going to be some deception and things like that, the 1-minute, the 15-minute, 5-minute are all common ones that you kind of need to look across time frames to see if there's something funny taking place on one and look at the larger time frame to know that, hey, as a matter of fact, let's flip over to the 15-minute chart. And that's what I expect to see. 3 big green candles in a row. This one is losing a little bit of energy. So then on the 15-minute, I would expect that this next minute, so there's like 20 some odd seconds left in this 15-minute candle. When this candle closes, I'm expecting there to be a little push in some direction on the next candle's open. I'm expecting a little bit of energy. I'm not sure which way. Yeah, so I think the energy is going to take it up a little bit more. In actuality, it's kind of dying out. So that'll make a nice swing on the 15-minute as that, where the yellow line is, as that as a swing high. And drop back down to the 1-minute. See if we can find a good point for entry. So now this, again, would become the swing high. And then there's your swing low. So we want that to break before we're really going to be short. And if the swing high is taken, then we can look for a short after. So now the swing high hasn't been taken, but we're moving up. So again, that 87 or whatever where I was thinking of taking a short would not have been good. So that would have been a bad trade. But because I saw that swing low forming, I kind of knew to stay away. And that's why looking at different time frames helps when you're going from a 1-minute to like a 15 and you're looking at that higher time frame. So I think this candle is probably going to turn red. I think that's a good place for our order. stuck for some reason. Okay, we're going to drop down to the 1 minute. We're going to pull that into our swing. Okay, guys, you're going to have to excuse me for a minute. I will be right back. Okay, so we're going to drop back down to the 1 minute here. And we did clear the bottom of that. So that trade did make us a little bit of profit. Sorry, I wasn't here while I was coming down, but I was trying to had to answer a phone call, and I forgot I left my phone in the other room, and I was like, oh geez, I gotta run over there now. So as you could see, I was right about the 15-minute candle turning red. There it is. We've reached into the gap. That is from here. And I'll draw it out for you guys there. And oops. And there. So because we reached into that gap, now I would say we may move higher. Can we continue lower? Of course. Will we here? I'm not exactly sure, but those yellow lines are the gap on the 15-minute chart. So because we dipped into it slightly, I would say we might move higher here. So far kind of looks that way, but we shall see. So we did take out that swing low right at that yellow line there. And that's what I was hoping would happen. So now, making a few points on that trade was pretty easy. Not really any stress. But now that that's taken out, I kind of just want to hang out and see how far up this goes again, so then I can reshort, because we know that that 15-minute candle probably is going to extend a little bit further. Given that we are about 7 minutes into the candle. This also could be a springboard for a move higher, but I still think we're going to come down a little bit lower here. Yeah. kind of thought we would accelerate more, but okay, we're going to come back over to the 1 minute. So as you can see here, we are pushing into that 15-minute gap again, which is the area between the two yellow lines. I was hoping to see something energetic like into the gap. Oh, like that. No, it wasn't very energetic. I thought it was going to be more than that, but I think we're going to go lower here. This doesn't look like it wants to leave the gap on the 1 minute here. It's kind of bouncing. Oh, and then we did leave the gap. Okay. Again, this is why we wait on things before I was kind of hoping this might be that energetic candle that took it further down into the gap, but it does not look like it. I'm just going to kind of watch this a little bit, see what happens here. Pop back over to the 15-minute. Again, we are currently not inside the gap, but we have pushed inside. so that maybe in the next few minutes the next candle is going to open up outside of that and expand us higher. But if not, that may become an inversion gap, and that's kind of what I'm hoping, and it'll take us down back to the opening range. So then that's when I could jump in and make a few good points. But we've got less than 2 minutes left on this 15-minute candle, so we're just going to kind of watch this and see how the 15-minute opens. Then we can jump back down to the 1 minute and look at how that's going. So we have 1 minute left on this 15-minute candle. So I'm just going to continue to watch and see how this this is the new 15-minute candle. Now it kind of looks like I think we're going to head higher here. We went into that gap, or this may really crush and move back in. So we are back on the 1 minute. I kind of want to see a good push into that, but kind of looks like we're going to stay above the gap again, the 15-minute gap. So if that's the case, then we're probably going to move higher, and I am going to become less interested in making a trade. Yeah, so as the, hold on. I thought we were going to get a push into the gap, and then I was going to take it. Well, I'm kind of becoming less interested in taking a short as long as we stay above that 15-minute gap, which is marked out by the yellow lines. I would love to be able to short back down into the opening range, which is the red and blue line below in the middle of the two brown lines down there. at around 51.69 to 51.64.50. Just doesn't look like we're going to get that. So if we get up to 51.92, I will not be short above that. So if we get up to that point, I will not be shorting from there because it could continue from there. So right now we're just going to kind of see what happens. If we get back into this gap, I think we might be going down, but I don't know. We'll have to give it a couple more minutes to see, but I'm out of time for today. So thank you for joining. And as always, stay profitable.